Tesla is the latest big automaker to challenge the EU over its tariffs on China-made electric vehicles. It joins BMW and Chinese producers in filing a challenge at a top European court. The move was revealed Monday in a filing on the website for the Court of Justice of the European Union. The challenge will open a new front in Brussels' conflict with Tesla CEO Elon Musk. Earlier this month, the EU stepped up its probe into Musk's social media platform X over content moderation. The EU imposed tariffs on China-made EVs at the end of October after an anti-subsidy investigation. The rate for Tesla was set at 7.8%, lower than any of its competitors. The court document showed the US automaker lodged its complaint last week. Chinese EV giants BYD, Geely and SAIC have also challenged the tariffs at the court.
Some of the biggest companies in the U.S., from Walmart to Meta Platforms, have rolled back their diversity, equity, and inclusion programs, known as DEI, even before President Donald Trump signed executive orders to scrap such programs.
We will forge a society that is colorblind and merit-based.
Reuters reviewed company reports and filings made to the U.S. Equal Employment Opportunity Commission and found that Meta, Walmart, Amazon, Starbucks, Deere & Co., Ford, Boeing, McDonald's, Lowe's, and most recently Target either scaled back or abandoned their diversity initiatives last year. Only 4 of those companies managed to increase the proportion of female staff since 2020. But the increases have been slight, including in middle management. Data showed Hispanic and Black women remained largely underrepresented. At Amazon, the proportion of female mid-level managers had risen from 29.5% in 2020 to 32% in 2023. Amazon shared an internal memo sent to employees in December about winding down outdated DEI programs, but said it still remained steadfast in creating a diverse and inclusive company. At Meta and Ford, the proportion of female mid-level personnel fell in the same time period. Meta, which confirmed to Reuters it's scaling back its DEI programs, said equal opportunity data was affected by layoffs. While anti-DEI activists argued these initiatives give people of minority backgrounds an unfair advantage, advocates fear the rollbacks will prompt companies to lapse back into inequality.
HSBC is preparing to wind down its M&A and equity capital markets businesses in Europe, the UK and the Americas. A memo sent to staff on Tuesday revealed part of a major shake-up of its investment banking operations. Europe's largest bank is working through a major cost-cutting exercise. The sweeping overhaul is aimed at streamlining costs, tightening focus and improving accountability of performance. But analysts have raised questions about the scale of savings that can be achieved and which parts of the business would be impacted. In the memo, CEO of HSBC Bank Michael Roberts said that the lender will retain more focused M&A and equity capital markets capabilities in Asia and the Middle East. Although it acknowledged how unsettling the news would be for HSBC bankers working in regions that advise on deal-making and corporate equity raising firms, such as through initial public offerings. HSBC shares were little changed after the news.